next few minutes, we're going to kind of go to mortgage school, and we're going to talk about the different types of lenders and how do you pick. Brian Sachs, who is a mortgage loan originator, joins us now. Brian, nice to see you.
Thank you. Great to be here.
All right, before we go to school, let's talk about what's happening in 8 days, because there's some big changes going to take place.
Huge changes. So FHA, which is the Federal Housing Administration, it's primarily a program that is a little bit more liberal in terms of guidelines. All the rules are changing. And so folks who have been pre-approved or may have spoken to a lender in the last number of weeks or number of months, you better go back to your lender because some things have changed. One big example, it used to be if you had a school loan that was deferred, it didn't necessarily have to count as a debt against you. That is all changing. So even if you have deferred school loans, they will count a minimum payment after September 14th. But there are lots of changes in the FHA program. The lesson, if you are pre-qualified, go back to your lender. If you haven't gotten pre-qualified, you should speak to a lender before you go shopping.
So that really changes the whole picture there.
It changes a lot of things.
All right, so that's going to affect a lot of people.
Yes.
Okay. All right, so let's get back to this issue of how do you know which type of lender you should choose? Kind of walk me through what the choices are.
That's a big topic. You know, the words are interchangeable. I'm going to a bank to get a mortgage. I'm going to a mortgage broker. The words are very interchangeable, but it's really critical to know who you're getting your money from. So there really are three major types of lenders. A mortgage banker, independent, a mortgage banker which is bank-owned, and you know that's interesting because many folks who have an account with a major bank think they're getting their mortgage from that bank when in reality that bank just happens to own a mortgage company.
Oh, okay.
And then there are small portfolio lenders and mortgage brokers. So some of the big differences, a mortgage banker typically will lend you the money. The loans are insured by VA, FHA, Fannie Mae, Freddie Mac, and oftentimes they will even service that loan. A small portfolio lender is actually lending you their money. Sometimes it could be a credit union or a small savings and loan. Sometimes their rules are a little easier, sometimes their rules are a little more difficult. A mortgage broker has no funds. So they are simply going to take your application and try to place you with either a mortgage banker or portfolio lender.
All right, so how do you make the choice? How do you know what
you
need?
You ask.
Okay.
And so when you are shopping for a mortgage, find out, is your firm a mortgage broker, or are they a bank, or are they a banker? It always pays to ask those questions, and you know, knowledge is power when you're shopping for a mortgage.
So where are the better rates going to be?
Well, it really depends. Typically, a mortgage banker, all three may have great rates.
Okay.
So it pays to shop. But the fee structure may be different. So very, very important that you know who your lender is.
All right. So, and if people want some more information about this, because I'd like to get them some more information.
Sure. Well, they can go to homebridge.com /Brian Sachs, S-A-C-K-S.
And you're busy. I can see.
Very busy.
You're forgetting to eat.
That is true.
You got to eat.
It's a good thing.
Yeah. All right, Brian. Thank you.